For decades, global markets followed a simple rule. When things felt uncertain, money rushed into the US dollar. When risk rose, the dollar protected capital. In 2025, that rule quietly broke. Not with a crash, not with a panic, but with a slow, unmistakable shift. Let me show you what actually changed using 5 interesting charts. Let's start with the US dollar. This is the seasonal performance of the dollar index, highlighting the year 2025. What stands out is not volatility, it's persistence. The dollar didn't spike and reverse, it didn't collapse in a crisis. It simply drifted lower all year, finishing down around 10%. That matters because this was not a risk-on year. There was uncertainty everywhere: geopolitics, debt, growth, rates, everything. And yet, the dollar did not behave like a safe haven. This wasn't traders speculating, this was capital quietly stepping away. Now look at gold. Gold didn't explode overnight. It didn't move in a straight line. Instead, it climbed steadily all year, finishing up over 60%. That's important. Gold wasn't acting like a trade, it was acting like money. When investors lose confidence in paper stability, they don't rush, they re-anchor. Gold was absorbing that shift calmly and methodically. This is what monetary repricing looks like. Not fear, not euphoria, just reallocation. Now compare that to silver. Silver didn't move gently. For most of the year it lagged, then suddenly it didn't. In the second half of 2025, silver accelerated sharply, finishing up more than 150%. This is classic late cycle behavior. Gold moves first quietly, silver moves later violently. Silver doesn't lead confidence shifts, it reveals pressure. When silver breaks like this, it usually means the system is under stress, not excitement. Now here's the chart that confirms this wasn't a one-off. Platinum. For years, platinum was ignored, underperformed, forgotten. Then in 2025, it suddenly surged, up more than 130%. Platinum doesn't move on narratives. It moves when scarcity and utility collide. When platinum joins gold and silver, it tells you something important. This wasn't speculation. This was real assets being repriced together. That almost never happens by accident. Now we get to the most important chart. Gold versus long-term US Treasury bonds. On one side, gold is up nearly 190% since the year 2020. On the other, bonds are down almost 40%. This is the heart of the story. In the past, when uncertainty rose, money flowed into bonds. Bonds were the ultimate safe haven. In 2025, that didn't happen. The dollar weakened, bonds failed to protect capital, and gold absorbed the flow instead. This is not inflation trading, this is not a growth story. This is confidence shifting away from promises toward assets with no counterparty. When bonds stop behaving like safety, the monetary system changes, quietly but permanently. So when we look back at 2025, the story isn't about prices, it's about trust. The dollar didn't collapse, bonds didn't crash overnight, they simply stopped being the default refuge. Gold didn't panic, silver and platinum didn't speculate, they responded. That's why 2025 will be remembered as the year the dollar lost its safe haven role, not in headlines but in capital flows. And once that changes, markets never behave the same way again. If you found this analysis useful, like, share, and subscribe to MarketVelugu, Light on Markets. I'll see you in another interesting episode. And to all MarketVelugu supporters around the world, Happy New Year!